So we're back here on the Duncan Duo Show. We're talking today about the differences between commercial financing and residential financing with George Gonzalez from FBC Home Loans and Gene Snyder from Platinum Bank. And you guys, we're talking on a topic I thought was perfect for the next segment of the show that a lot of people out there have a misconception about. And I'll start with you, Gene, because I went into getting a loan on our commercial building with a misconception about the time it would take for us to qualify, for us to put in everything. And I think I thought, 3-4 months, I thought it was a longer, and I mean, you've more or less made it clear that's definitely not the case.
No, Andrew, that's not the case. It's definitely a shorter period of time than that on a typical type of deal. If a customer walks in and they're very experienced and know what they're doing, and they have the project all fully in front of them with the information that we need, start to finish, you could get the whole thing completed in about 4 weeks. That's including closing. So figure about 2 weeks for credit underwriting and approval, and then 2 weeks for documentation and closing. Now, there's some deals that are more complex than others. Obviously,
Sure.
They can take a longer period of time, sometimes even 60 to 90 days. But if you're talking about a typical straight-up deal, 4 to 6 weeks is very
And that
appropriate.
that's comparable to the residential side, although with some of the loan products it can take longer. And again, like you guys mentioned, like you both mentioned, a lot of that depends on the borrower. Just like, for example, you guys would have taken 6 months to loan us money if it was me in charge of getting the paperwork together, because it's Angela that does it. Angela is the queen of that side of the house. And, if you guys needed, the tax, I don't even know where to get our tax returns. Like, literally the other day, I had to go to her to ask, I had to get a check from her. I don't have a checkbook. I don't have a check. So
Angela, what's my social?
Yeah, exactly. Like, so what's funny is, I'm the marketing guy. I'm gonna help sell the homes. I'm gonna get all that. That's kind of my focus. But what's interesting is that if the person comes in with all their ducks in a row, it can happen quick. But if they don't, and you're chasing them for stuff, either on the residential or the commercial side, that's where the delays can happen.
Sure can, and you just have to kind of walk your customer or your borrower through the whole situation, so that they're aware of the time frame. Obviously they come in, they're very experienced. That relationship was built already. We have someone like your wife Angela that has all the information ready and prepared and is going to send it right in. It's going to go much quicker. But we'll inform and walk the customer right through the whole process and say, look, we still need these tax returns. We still need your personal financial statement, for example. And it's going to take a little bit longer if we're going to have to wait on that. And so we're very accurate, and appropriate with the customer, having to do with the timing.
And George, on the timing front on residential, what would you say typically is the biggest holdup? Because you'll hear people say, "Oh, it took 3 months to get my loan done," and usually in the back of my mind, I'm thinking, "Yeah, well, you're probably guilty of something. Look in the mirror, partner." Because usually when you hear it take that long, there was something on the borrower. Not always, but sometimes there's something cleared up. But what are the things that hold you guys up from getting somebody's loan through quickly? Things that naturally kind of occur over and over again.
Well, you've got updated pay stubs, updated bank statements. When you provide a bank statement, there's any large deposit has to be sourced and seasoned. If we can't do that, obviously we've got to get that documentation.
And source and seasons for kind of our amateur listeners, that basically means we have to explain where that money is from and what it's for.
Right. But the average residential, if you come in prepared and you're organized and you have your pay stubs, your W-2s, full tax returns, all schedules. If you're self-employed, I got to have business and personal returns. It's a 22-day process. If you're doing a construction loan, which we do a lot, FBC actually just became named #1 in Central Florida for new construction. That process takes about 60 days. If you're doing a rehab loan, it's about 45 days because there's just a little bit more paperwork involved, and with the contractor, getting bids, getting everything approved, the appraisal. But the average, I'd say 22 days is plenty of time to get a good loan done.
And I think the key to that, just like we said, is if the borrower is actively engaged in giving you everything you need quickly. If you're waiting a week on tax returns or a week on this or a week on that, it's 22 plus a week. I mean, basically whatever delay it is getting stuff from the borrower or from anyone in the transaction, add more time to it. And that's, I think, where sometimes people don't kind of grasp the urgency. And then, the day of closing, they're complaining, "Oh, we closed a week late, but you held on to your tax returns for a week." That's why a lot of times those delays happen. And of course, they forget about it. So 3 weeks ago, they were supposed to get you your tax returns. They took a week to get them to you. And then we closed 3 days late, and they want to, "Why are we closing late?" No. Well, you held on to your tax returns.
Title company's fault.
Right, exactly. Yeah, everything's the title company's fault. And we're going to talk, it's funny, we're going to talk after the break about something that could be the title company's fault. A news release this week about, kind of a lawsuit going on back and forth, with the House and kind of how, the title side, kind of addresses it. But it's interesting though on the consumer side of it though, it really everything that they don't get in and every delay that they take in getting something back to you is where those loans, become problematic. And then of course the consumer wants to say, why are we closing late? And it's like, well, you can look in the mirror a little bit,
Yeah.
and a lot of times it's on them,
A big thing too they need to realize is when you provide the last piece of document, you provide it on a Friday at 3 o'clock, it doesn't mean it's clear to close on Saturday morning.
Right.
It's got to go through under processing.
And everything's business
underwriting.
days, yeah. Friday at 3 o'clock. I mean, it's not getting touched till Monday at 10.
Yeah.
So we're going to be back after the news break. We got some more news articles to talk about, more real estate market stuff. So tune in, and we'll be back after a quick break.